Hello, everybody. Welcome to Friday. Looking forward to our webinar as always, and excited for the next hour and the opportunity to visit with you and see how things are going in the market. Talk about current positions and hopefully have an opportunity to explore some things that you'll be interested in as well. Gib, thank you for the audio visual check. Although it sounds a little omnipotent. He said, "I hear all, I see all." So. In any event, appreciate it and excited to have everybody here. Hopefully, we'll get a few more people coming in as we get things rolling. Thank you, Dell. He confirmed as well, so I appreciate that. Hopefully, we'll get a few more people coming in. As usual, I've unmuted everybody in the GoToWebinar software that's here so far. Just invite you to feel free to speak up and offer your questions and perspectives as we get things rolling. If you prefer, you can use the questions panel just like Gib and Dale have to send me a message. I'll pay attention to that throughout the course of the webinar and try to fold those comments and questions in as we keep things moving. So in the meantime, like I said, everybody is unmuted so far that's here. How's everybody doing? How's the week been? Humdrum, Gib says. A little unremarkable. Sometimes that's not totally a bad thing, right? Sometimes a little quiet, a little less excitement maybe is not necessarily a bad thing. Sometimes maybe it's just a little bit boring. So I understand. All right. Well, let's go ahead and dive in. It is Friday, and that means that the last Friday of July, I should say. There are some weekly options going on. That means that there are a couple of stocks that I have open positions on that are set to expire today. We'll cover those really quickly, take a look at some of the other open positions that we have, and go from there. First one here to talk about is Comcast. This is a put sale that I placed at the beginning of July. So this has been about a 3-week trade, and brought in about 2%, a little under that in terms of the put sale, selling the $37 strike price. Adele says the accounts took a bit of a setback this week, but keep looking. And, especially just the last couple of days, right? I was pretty interested yesterday to see how, yesterday and Wednesday, excuse me, things kind of recovered late in the day yesterday, but there's quite a bit of pressure Wednesday and Thursday on the markets. And that was something that, in the very, very near term, it can create a little bit of stress and make you wonder a little bit what's happening, and that's kind of normal. But like you said, Dell, the idea is to keep looking, and even in those situations, there's an opportunity to look for stocks that are increasing in value. Barry, already angling here, already angling for a tally mark, which is awesome. He said he got 2 more cents than I did. I got 70 cents. Barry got 72. So there you go. That's nice. I like it when people are able to do a little bit better, or even a lot better than what I do if you're placing the same trade. So Comcast has been a little bit volatile over the last week or so. It's we can see, its range has been. Give me a moment. There we go. Interesting. Okay. Get rid of that. we go. Apologize here, playing with my tools a little bit. So it rallied up here, middle part of the month, peaked at about $40 and came back pretty sharply again, coming up on the earnings report, but now it's picking up some new momentum again, back to the upside, and sitting again, not too, it's actually just a little bit above 40, so we've probably got resistance somewhere about 41.50, I would say, for this stock. And that means that, yes, it's true that the stock could drop back. We've certainly seen some big movements just in the last day or so. I mean, here we are almost 5% so far today on this stock, so it could easily drop back. I'd be a little bit surprised if it drops all the way back down to go below 37 before the market closes. And welcome, Randall, glad you're here. And sorry for being late, my computer would not come on. I can relate. By the way, if anybody has noticed, just make sure to let you know, if you were trying to get onto the ITG website earlier today, there was a little bit of a technical glitch that has been resolved, but that was something that we were dealing with briefly. All right. So here is Comcast again, and as I mentioned, I brought in 70 cents on this. Barry brought in 72. Yeah, Barry said I've had some of my holdings move by $4 and $5 this past week. You know, we're seeing more and more stocks coming up on earnings, and this earnings season has seen a little bit of a higher level of volatility for stocks around those earnings. I was watching Ford as just an example, and we'll come back to Comcast here in a sec. I was watching Ford coming up on its earnings because it's kind of interesting to see that it had as it had rallied here from 1150 to to about 1450 in just a couple of weeks. Pretty sharp move here, and then the earnings report came out, and well, we can see what happened, right? It just kind of killed it, and that's going to happen sometimes when we see things like this around earnings. But there's also a little bit out of the ordinary, and I think some of this is being driven by questions about whether or not the economy is slowing enough to warrant the interest rate cuts that everybody wants to see and that the market is pricing in, or not. So we are seeing some of that increased volatility around these for sure. Comcast, I think, is a good example. Here are its earnings again earlier this week, and did pretty well on earnings, not so hot on revenues, just based on this graph here. But really, it's picked up some positive momentum since then, and rallied by about $2.50 from that point. So. Barry says he has a $45 call on Bristol Myers that expires. So we'll take a look at that, Barry. Are you talking about a covered call, or did you buy a call on that? As things stand on Comcast, I'm going to go ahead and let this one expire, which is my normal routine, of course. At the same time, let's expand the number of strikes I've got. There we go. Here's the $37 strike price that I sold. There has been some activity on this. So we have a bid of 0, ask on 1. You could certainly on this one put a, this is one you could certainly put a bid price of 1 cent on it, and you would probably get it if you wanted to close this out earlier. Although the truth is that if you're considering doing that, probably would have done it a couple of days ago. So that is interesting. And if you do buy it back, then you get the reserve, the cash that you have in reserve in your account for the position back earlier. You're able to use it earlier, and that could be useful if you're willing to roll up. If you still like Comcast at $40, for example. Here's 2 weeks out, August 9th. This is kind of interesting post earnings. Not a recommendation to buy or sell, of course, but 66 cents on the ask for the 40 is a little over 1.5% for a 2-week period of time. That's not nothing. If you still, again, if Comcast is one of those stocks that you think might be a legacy kind of a position, and you still like it at 40, that's not a terrible trade. That's interesting. Any other thoughts on this one? We'll cut over to Bristol Myers here in just a minute, Barry. But any other thoughts or comments about Comcast? Anybody else that's on this trade? Or if you're not, just tell us why not. That's fine too. Even if you have a dissenting opinion. Barry says he's going to let it expire as well, and that's okay. Give me just a sec, folks. All right. Gibbs says the open interest is low, and so I appreciate that. Let's cut into this one really quickly. Go to the details. Yeah, on this particular contract, you're right. 54, not a ton. There's a little bit of volume. I still think you'll be able to get in, be able to move on this pretty quickly. Looks like the bid is already adjusted a couple of cents lower, but you could probably, the midpoint now is about 66 cents. And there's a fair to middling chance that you'd be able to get that price. You'd probably have to wait for it. All right. Yeah, I'm okay letting this expire like Barry and seeing what, maybe checking in on it Monday, Tuesday, see if it's still around this price. Maybe considering how sharply it's rallying right now, just from this low point, right? We're 37.50 roughly, now a little bit above 40 in just a matter of 3 days. It would be natural for it to sell off of this and self-correct a little bit. So we'll see if that happens. It's also got very clear resistance up here at the 200-day moving average, which is just a little bit above $41. So I would not be surprised to see it do exactly the same thing it did here and continue to use this line as a very clear resistance point. Okay, so that's Comcast. Let's go ahead and cut over here to Bristol Myers. Wow, look at that rally. That's pretty impressive. The market talking about increased volatility here, right? Here's the earnings and here's the reaction. Boom, up to this price right now with an interesting gap on an overnight basis. That rallied about $2 overnight and is continuing a little bit higher. So Barry, give us the numbers. You said you have a $45 call on this. So this is right about where your call is at. Certainly looks like you're going to get called out if you haven't already. um, what price did you buy the stock at? Says he's looking, no problem. This is a really good example while he's doing that, folks. This is a really good example of this. We talk sometimes about bullish level one, bullish level two. For a little while, this was kind of the primary focus that I was trying to put on the kinds of trades we were looking for. But here's the 20-day moving average forming this nice little bowl with a little bit of a move upward, and then some really solid movements since then. The early signal on this would probably have come, boy, it's really hard to say because there's not a clear and obvious hammer here, but I would probably go with this engulfing candle as it broke above the 20-day moving average would kind of be the signal point for a bullish level two signal. And that's usually a good signal that the stock is likely to pick up at least enough momentum to carry it up to wherever the 200-day moving average is. And these patterns, you're almost always going to see a declining 200-day moving average. If it happens to be flattening out, that's even better, but it is not unusual to see a declining 200-day moving average, nor is it a barrier to placing the trade. And in this case, we're seeing, what looks like a nice breakout, a nice push above the 200-day moving average right now off of this earnings report. It'll be interesting to watch this next week and see if it continues to maintain that momentum. But this, aside from bullish level one, bullish level two, a push above the 200-day moving average, if it is confirmed with continued positive price movement, say in the early couple of days of next week, this is often a very, very early sign of a major trend reversal. In this case, a downward trend that we can see is going all the way back really to the latter part of 2022. So this is a long downward trend, and with a stock that could very well rally all the way up here to about $80 per share if it does build a new upward trend. So this is very, very interesting, to be sure. In any event, not even knowing Barry's numbers here, this is a nice covered call trade. So, here's the first one. There's the second one. So 1 + 2 is 12, right? That's the new math. Let's go ahead and take a look at Bristol Myers. Now I'm going to need to redo my analysis. I follow this stock. This is in my watch list. But obviously with a new earnings report, I'm going to be looking to redo that analysis here and see where things stand. But let's go back, expand this again so we get, there's the 45. Okay, Barry got in at 52. He's made $1.40 in premiums and will get the dividend. You have to give me a -1 or a -2. Okay, well, we'll leave it as it is, Barry. That's okay. So this is interesting, and I appreciate, I appreciate the transparency, Barry. That's because we've talked in the past about selling a covered call on a stock you own in a downward trend that's dropped below the price that you were assigned at, and what some of the things that you have to be some of the things that you have to be aware of in those situations, and this is one of them. So here's the price that he bought in at. It's 52. So he made $1.40 in premiums. He's going to get the dividend, and that's 60 cents. So that puts his income at $2 again, which is nice. So that puts his cost basis down here at 50. But having sold this covered call at 45, yesterday looked like you were in maybe an okay spot with the earnings coming up, especially if the stock dipped a little bit lower there. But this gap is certainly creating this what we're going to be looking at is about a minus $5 loss on this. And this is what's going to happen sometimes when you sell covered calls on these stocks that you own in downward trends. This is not a criticism of what Barry is doing. It's just an acknowledgement of the reality that sometimes this is going to happen, even with the best kind of trade management plan in place, the right kind of money management and position sizing, all those kinds of things can be right. And sometimes this will still happen if you're going to make these kinds of trades. And that's part of, I hate to call it a game, but it's part of the process. It's part of what happens, when you're working as the seller on these kinds of trades. It's one of the reasons why sometimes, I might sell. Let's say that I sold a, excuse me. Say I sold a put option on Bristol Myers at, right in this area, and I sold it at $48. That was the strike price. Next day, it's all the way down here at 44. Sometimes that happens, and that can create, that can create, a situation that you have to decide how you're going to manage it and what you're going to do to move forward. So just kind of account for those that understand they do happen from time to time, and adjust it from there. So a couple of comments here. Let's catch up really quickly. Barry says, when I sold the cover call, it was trading at less than 42. Yeah, we have a pretty solid consolidation range all the way from June and into July down here. I would have taken this if I owned the stock at the same price. I would have considered selling a covered call here, absolutely, because you have very clear top consolidation range resistance, maybe 43. So there's nothing wrong with the trade. I'm very confident in saying there's nothing wrong with the trade when you placed it. It's just, this is going to be one of the things that happen. And he says, I'll make it up somewhere else or back with BMY when it settles down. And that's exactly right. Just taking on that, next trade mindset is the right thing. Antonio says, in the same sector, you should look at PFE. It's showing the same trend. We'll bounce over to that one in just a second, Antonio. I appreciate that one. Appreciate that. And James says, I bought BMY early in the month at 39.65 based on just the dividend, not realizing it would have this kind of move. Well, sometimes we're happier being lucky than good, right? But this was pretty good, James. So there's 39. Barry, I know you won't take offense to this. I'm taking one of your marks and giving it to James. So he's in at 39 now, sitting on about a $10 profit so far, along with the dividend. That's nice. Antonio, how many times was it done to? James says that was luck. Like I said, sometimes it's better to be lucky than good. even though, you know, you take it when you get it, right? Antonio, how many times was it done to when it's finally called out? That's a fair question, you know, and that part of that is a completely subjective answer, because it depends on who is going to exercise the call on the opposite side of the transaction. It's not always a given that that is going to the person exercising the option is going to be on the opposite side of your contract. So some of that is kind of an unquantifiable element.
No, what I was saying, when you own a stock like this and you make covered calls all the time, you make the premium and you never get called out.
Oh, I see. Excuse me, I misunderstood your question. I misunderstood your question, so I appreciate
you
that.
can make quite a good profit that way.
Right, right. And if you've been able to do it consistently over time, and we have had a number of people in this group who have applied that approach to do, you know, to bring in more than enough premium to make the overall position worthwhile. And that's awesome when you can do it. My preference for these is to think about these like the legacy stocks that we talk about. And since I do, one of the reasons I like to be assigned stocks from these put sales, and I don't mind holding them in downward trends, as hard as that may be to watch, is because of their dividends, and that's a passive income source I'll take in. And I'm usually, as long as the value proposition, as long as the fundamentals are clearly not just, you know, going out the window, as long as the fundamentals are solid, the value proposition is still there, then I'm generally going to be willing to hang on to that and wait for it to come back to the price that I bought it at. I go back to the core principle here, which is, you know, when I'm selling these covered calls, I am explicitly saying I'm willing to own the stock at this price. I think it's a good value at this price. And if that is a true statement, if that is a correct statement, then that means that even if the stock drops significantly below the price that I was assigned at some point the market's going to recognize that value again. And that's the, you know, the approach and the mindset that is kind of a core principle of value analysis that the people like Warren Buffett have learned, that Benjamin Graham kind of pioneered. So, all right. But I'll usually wait for it to get back up near that price. Okay, Antonio, you said take a look at Pfizer. And this is building a little bit more of a gradual upward trend right now. But then again, it hasn't actually done its earnings report. But look at that nice little rally up here around 31. Just in the interest of transparency, I'll go ahead and say I'm in on this one. Gee, I got to go way back. I'm in on Pfizer up here in the 50s. So somewhere around in this range when I was assigned. It was on this initial dip lower when I was assigned the stock. So we've been watching it for a little while, and so it's got a little ways to go to come back for me. This is a really good example of what I was just talking about in that sense. But it is building some momentum here on the upside. Just went ex-dividend, well, today. 42-cent dividend on that, which is pretty nice on an annualized basis at this price, with earnings coming up on Tuesday. So it is going to be interesting to see if it gets the same kind of bounce that BMY did. Let's see. Looks like it's getting a lot of attention right now, which is interesting. Barry's in at 28. You want that check mark back. Bless you, Antonio. Let's see. So here's Barry. Seeing a nice little rally here, which is kind of nice. So you're up about $2.50 on that.
There's few stocks that I look at because in being Canada, the dividend, US only dividend stocks cost more taxes. It really paying, even when they're in RRSPs. But there's few
Gotcha.
stocks that a swing trader as myself that look at, and to me, this is it's got a great dividend, and it's bucking a long-term trend. To me, this is I just put the watch, but I'm not going to trade before earnings. Just
Right.
I think it's though. You might put a quarter position. Who knows? For earnings, just to see if you get a bounce up or a bounce down. But it's a big risk earnings.
Well, and again, we're looking at an earnings period right now where I think volatility around earnings is even a little bit higher right now than it has been in some of the previous quarters, which is really interesting. Now, to the positive, I mean, Bristol Myers is a good example. Positive earnings surprise. You saw that big gap, right? So that could work in the favor of shareholders right now, or it could work against them depending on how the market perceives it. Technically speaking, though, this crossover 20-day moving average above the 200-day moving average is also really interesting, and that could be again a confirmation that there's or not necessarily a confirmation, but a signal that a new upward trend is building. Let's throw up a 50-day as well. Let me change my settings here really quickly. Here's 50. And I want it to be, there we go. So it's this blue line, and we saw the 20-day moving average cross above the 50 the day before it crossed above the 200-day moving average. Let me zoom in here a little bit more. Oops. And so here's crossover 1. And then crossover 2, literally the next day. So these together are positive indicators. Then we have the 50-day moving average crossing above the 200-day moving average a little bit after that. So these are all kind of converging signals that usually help to, if you are looking at a swing kind of a trade, a technical pattern, these are the kinds of things that usually provide confirmation of that. I like what you said, Antonio, about trying to be a little bit cautious around the earnings report. So, it is going to be interesting to see what happens Tuesday on this and see how the stock reacts around it. But this is certainly looking, it's kind of a triple cross, which is what a lot of times you're looking for a major trend reversal. So, all right, that was Pfizer. Appreciate the heads up, Antonio.
Would you like another one?
Do I ever argue?
Well, it's hard finding. I like I said, swing trader. It's different, but there's two that I like that were really other than Pfizer that I saw that I thought you might be interested in was Royalty Pharma, and one that maybe a little overextended for you would be Schneider International, but Royalty Pharma is RPRX.
All right, again, just in the interest of disclaimers, I've not
This
done any analysis on these. Yeah, not done any analysis on these, so I can't say yay, nay. I can talk. We can obviously take a look at the patterns and talk about them. So that's why I don't mind this. This is pretty cool. All right. Yeah, there we go. Let's make that red. I like that. You can use whatever color combination you want if you're using these moving averages as well. But having the difference in colors makes it a little bit easier to see the contrast between them. Okay, so we have the 50-day just starting to turn upward, 20-day clearly moving upward, and I like the bend on this 200-day moving average. It obviously coincides with this cross above, and we see a lot of positive bullish momentum up here. Again, this isn't necessarily a confirmation. This is an early signal at this point. But we do have the 200-day moving average crossing above the 50-day right now, so that's interesting as well. Take a little bit more time for these moving averages to get above the 200-day. So what I would kind of look for on this one would be probably a little bit of a retracement and see if it tests support at the 200-day moving average. And then if it bounces again, that's probably a good signal at that point.
It's still earnings soon.
Yep. If you're looking for kind of a bullish technical short-term signal, that's probably what would give you the best confirmation under this particular scenario. And yeah, we do have the earnings coming up on the 8th of August. So royalty's interesting. You said Snyder was the other one.
Yeah, SNDR. Oh, I see you got it quickly.
This is another one I've had in a watch list for a little while.
Yeah, it's a good one. It hit my list this week.
Yeah, I like the transportation sector, and
yes.
so I try to keep my eye on some of the companies I'm aware that I know about in this sector. Trucking is interesting. Transocean shipping, the whole bit of it. There's a lot that's very interesting about transportation, even if you're just trying to kind of keep a gauge on economic activity. That's really interesting. So, boy, it's going to be interesting to see on this one if this earnings forces the stock to self-correct, or maybe keep going. This one might be a little bit of a case of buy the rumor, sell the news, meaning that it may not really matter a whole lot what the earnings are as far as how the market treats them, unless they completely blow them out of the water. We may see the market sell off a little bit, and you might see people taking some profits around this. So we'll see. This is a stock that hasn't seen a ton of increase in volatility. Here's a pretty nice pickup here from May earlier in the month. Just kind of hovered a little bit before it dropped back again. It kind of takes the market a little bit to, it looks like it takes a little bit to digest the earnings from this stock, right? Before it decides what it's going to do with it. So it's going to be another one that's interesting to watch. All right, those are cool. I like it.
An IPO came out that's in the same sector today that seems to have been doing pretty good. So that sector is pretty hot right now.
Getting kind of a residual benefit for the other more established companies. That makes sense. Maybe not more established in the business, but in terms of their market presence, right? So, okay. The other position that I have that is expiring today is a covered call on CVS. I was assigned this stock. Got to go back a little bit. Sorry, not that far. I was assigned at 59, sold the 59. So again, willing to be called out at the same price that I was bought at, or that I bought the stock at, I should say, if it's above it. So let's take a look. And we are seeing a little bit of a bounce today. It was a little bit below 59 when I obviously when the market closed yesterday. So, you know, was kind of uncertain exactly where this is going to go today, but we're seeing a nice little bounce, about 3% so far today. So it looks like I'm going to get called out unless we see a pretty sharp movement backwards in the last couple of hours. Kind of unlikely. And so I get to hang on. I get to, the entire benefit of this trade was that $1.20, but that gave me 2% in 7 days. And when I combine that with the $1.20 that I brought in a premium from the assignment, which also happened about 6 weeks ago, you know, you're really talking about $2.40 on 59. You know, we're talking about a little bit over 4% for 6 weeks. I'm okay with that. That's why getting called out here at 59 doesn't really bother me too much. Any other thoughts? Any comments on CVS? All right, Antonio wants to talk about Enbridge. Thoughts about Enbridge? They recently bought our natural gas company out here in Utah, and I was actually happy about it. That's speaking as a consumer, not as an investor. But as an investor, Antonio, you put these guys on my radar, and I've been following them ever since. So Enbridge is an interesting company. This is Canadian.
I am an investor.
This is a Canadian energy company. Obviously, oil and gas pipelines is what we have listed here. They also do some things with natural gas as well, as I mentioned, expanding some of their operations in the U.S. But again, nice positive pattern here. Coming up on earnings, boy, got a lot of these stocks that are either hitting earnings right now or just coming up on it. And that kind of makes it time to take a breath and kind of wait. Sorry, go ahead.
I was saying, 'tis the season of earnings.
Yes, that's right. And we're just in the middle of it, and that's why we're seeing so many of these stocks that that we've pulled up here, where they're a couple of days away from earnings. It's, you know, we're progressing through the earnings calendar, and so we'll see where these go. Trying to think, I did go through a pretty broad analysis on Enbridge not too long ago. I'll be honest with you, I'm kind of drawing a blank as to exactly where I thought it was as far as value, but we're certainly seeing a nice positive bullish movement here. I do like, again, talking about the 200-day moving average. We're seeing that starting to angle upward. It's getting some distance between the current price and its moving averages, right? And that usually tells me that we're coming to a point where we may see a little bit of a retracement, and that would probably be normal. But 50.61 is where the stock is at now. You should see really strong support, and I'm not just talking about the moving averages, but let's see, yeah, should have really strong support at about 49. I'd be surprised if it dropped below that. Retracement down anywhere between 50, 49 would be really, really normal, especially if this new upward trend is really starting to build some long-term momentum. Retracement, consolidation around this range, followed by an eventual push off of that support would be entirely normal. We'll see. Enbridge is always interesting. All right. Anybody else has any others? You can certainly feed them in if you have an opinion on any of these. Certainly feel free to offer them. In the meantime, Antonio keeps feeding me some other ones to look at. So if this is only giving you some additional fuel to think about for some of your own watch lists, then I think that's a good thing too. Antonio says this is the last one. So if we're going to be looking at any others, it's going to have to come from somebody else. Take a look at FTAI. This is a US stock, aviation. Okay, wow. They do pay a dividend. That's not going to be a ton relative to the stock's current price, considering the overall upward trend, but it is a dividend paying stock, and that's the primary thing I care about. But boy, I mean, that's just an impressive upward trend, right? There's just no other way to describe that. All the way from, wow, what is that, 16, 17, low point maybe 15, 14 in 2022. How much of this trend have you enjoyed, Antonio? He says, I like a parabolic or a fish hook. Here's the fish hook he's talking about.
As a swing trader, this is about the 4th or 5th time I've been into FTAI.
Okay.
And I started back last year.
So you've enjoyed a healthy portion of this run, to be sure.
Yeah, it's stopped me out a couple times. I mean, that big drop kicked me out.
Sure. So here's the upward run, and then you get the fish hook is the correction, right? You get a little bit of a bend down, and when it finds support, this is where we start to get, the here's A, here's B, and then the push above this is C, and that came about 2 days ago, and it's been confirmed today. Now we'll see. We're pushing a new all-time high on this one, so we'll see how much higher it can push. Obviously, people would have been saying that on this stock throughout the last couple of years, and it's just continued to go up. So I'm not going to say that it couldn't go higher.
No,
Go ahead.
Thesis on this is that there's been a lot of problems with Boeing, as everybody knows, and and also in new orders of planes with components and that. So this is a component company. So everyone's been doing a lot of repairs, and I don't know how well that's going, but it seems to have been the trend that's been doing very well in that regard. So it's one of the reasons why I liked it an awful lot. A couple of warnings signals, the earnings just kicked down, but again, you got to take that with a grain of salt. The sponsorships continued to increase institutional wise, and that's what the big positive for me is when I start seeing the institutional money, I really take a closer look if I can find them that way. So that like I said, it's a good company. The fact that it pays, I think it's a good company. The fact that it pays dividend to me is a bit of a bonus. Again, I lose a lot. Right. I lose taxes on it because it comes from the U.S. So,
right. Yep. This is that's an interesting comment about its relationship with Boeing. I like Boeing as a company, but right now, let's just face it, they're radioactive, and they've kind of, there's a reason they're down here, and they may deserve to be even a little bit lower. Trying to rally a little bit right now, but when it comes to aerospace airlines, either dealing with the airlines themselves or if I'm wanting to deal with airline manufacturing, I'm tending to focus. My preference right now has kind of been to lean towards not just component manufacturers, but companies who don't have Boeing as a customer. And one of those is RTX, and boy, again, here's a big surprise. Again, not a recommendation one way or another on this one, but these guys, they're also, you may recognize them more as Raytheon. They rebranded themselves and now they call themselves RTX, but they do a lot in aerospace and defense. And on the commercial side of aerospace, their biggest customer is Airbus, not Boeing. So that's a positive for them in my mind. Ray, looks like you got a comment.
Yeah, I was gonna bring up a stock that I want you guys to look at.
Okay.
AVGO.
AGO.
AVGO.
Excuse me.
.com.
Yep. There we go. I just did a split. That's interesting. 10-1.
And it's got a little turn right there.
Got a little hook.
And he filled in the gap there.
Yep. Gap here higher after earnings. I'm going to have to come back and take another look at this one just because of, considering the price. This is one that has generally not been practical for majority of people that I work with. But this split might change that a little bit. And so this would be interesting to look at from a, from the standpoint of value, fundamentals, the rest of it. But this is an interesting little technical pattern right now.
And I took the August 16th.
Okay.
Right now it's paying more than what I got for it, so.
Yeah.
It's a very good company.
Right.
AI, long time and performer, and it really is a very solid corporation.
These guys are definitely a big boy in semiconductors. There's no question. They have a lot of they own a lot of intellectual property that that generates a significant amount of revenue. I do know that. So this could be an interesting.
It makes it tradable now.
Yeah, the split makes it a little bit more practical to think about from a trading standpoint. And if we're seeing, I'm drawing this line here. The support here is mostly based on this, just this pivot, right? But if this pushes above the 50-day, picks up a little bit of momentum, it's going to have to overcome the 20-day moving average at about 165. But good heavens, the 50 days at 155. So there's about $10 of room, just if you're talking about maybe a swing trade.
Oh, this is a great one. I've been watching this one. This is a really good stock. The fact that it came back, I love it. Absolutely love it. And earnings have gone by. This is really a very good stock right now to, as a swing trader as well, and institutional wise. I mean, it really has got great sponsors.
The value I have for it is a little below that, but with the premiums that I'm getting for it on the 16th, then it kind of makes it pretty close. So
yeah, so that's interesting. And so the green line that I've thrown up here is a variation of the trend line. The 200-day moving average is an easy visual reference. But the other thing that you can do is especially with long-term trends, that's kind of interesting, is to go back to the beginning of the upward trend, which started in late 2022 here. You mark the beginning of your line at that low, and then you look for some consistencies between the higher lows that the stock is showing. And so I could go here, and that's kind of that's a little bit consistent with what we saw from the 20-day moving average through 2023, but then it started to accelerate a little bit here, right? And so the reason I moved it up here was to connect it to this low, which was obviously a pretty solid catalyst to this next move higher. That doesn't invalidate the rest of these moves. It just it gives you a way to make the trend look a little bit more responsive to what the stock's momentum has done to accelerate the trend over the last several months. And so that could put it around, let's support around 137 maybe, if it does continue to pull back at all.
I have an intrinsic value of 138.
Okay.
But I want to keep it as a legacy stock. So what I'm trying to do is get a couple of premiums in there and make sure that I get assigned. So, so if I get some premium, it'll bring my cost basis down, and
Right.
then I'll hopefully get assigned so that I will have the stock.
Yeah. And assuming this upward trend continues and is extended at all, then, you know, upside up is certainly up to about
Good support there at like 142.
Yeah, that 180 mark is where the high is. Even if you don't want to wait for that, you know, here's 175, which is pretty nice. So again, I can't speak to the other pieces of it. I know Broadcom's a big company and a good company, but it's been a little while since I did any detail, did really a deep dive into them. So appreciate that. That's actually pretty cool.
Very much.
All right. All right. Well, if nothing else, hopefully we've all gotten a little extra food for thought. Maybe some additions to watch lists here, which are kind of nice. Do have some trades coming up in the next couple of weeks. Next week, here's a put sell on Hormel. I sold the $30 price. It's kind of sticking with my boring theme, and it's holding up pretty well so far. Now, with it at 32 and a week away from expiration, there's an earlier opportunity here to think about the opportunity to manage this, to think about rolling the trade. And so, again, here's 30. I brought in 45 cents on this one, and we'll just kind of wrap up here. But here's buying it back at 5 cents potentially. And again, we're talking about a food company here, and Hormel traditionally is, you usually got to go out at least a month on these in order to make them practical. And right now, it looks like you'd actually have to go a little bit in the money on this to make this look very interesting at all. That's pushing up near 32. So just a little bit in the money on this. Here's 60 cents for 1 month, not quite 2%. 50 cents for 3. If you wanted to be a little bit aggressive. So anyway, that's coming up for next week. We'll see where that one goes. And then we've got more recent put sales. That are scheduled. Here's for the 16th, covered call for the 16th, as well as this week's put sale on Kraft Heinz, excuse me. So we'll see where all of these land, kind of taking a page out of the conservative playbook for now. But some of these other stocks, Antonio's parabolic movements are who knows, maybe they give you some additional opportunities to think about. Yeah, Antonio says a lot of high price companies are splitting to get more options activity, and that's true. Yeah, we've seen that quite a bit lately. So, all right, everybody, thanks for your time as always. I do appreciate it. This is always a fun session for me, and I appreciate what everybody brings and your comments and participation. Randall, thank you as well. I hope you have a great weekend with your loved ones as well, and the same for everybody. If you hopefully you have something fun in mind. If you have any questions between now and next week, please do let me know, thomas@investive.co. One other note really quickly. I know some of you have made comments about not getting the email alerts on my posts. If that is the case, if you are still experiencing that problem, I'm going to ask you to do one of two things: either email me directly, and I'll talk to support and get that looked into for you, or you can email them directly at support@investive.co. Whatever your preference is, whatever you're more comfortable with. If you're not seeing those emails, please do let us know so we can try to get that resolved. All right, everyone. Thanks again. Appreciate your time, and have a great week.
Happy trading, everyone.
Thanks.
Cheers.